Most people think wealth management is just picking investments, but that belief can quietly cost retirees hundreds of thousands of dollars over their lifetime. And today, I'm going to show you how. Because once you see what real wealth management actually is, you will never look at your retirement money the same way again. Before we get into it, let me tell you a quick story. I once met a couple who told me they had a financial advisor for over 20 years. The same advisor, same firm, same accounts. They felt confident, comfortable, secure. But when we reviewed their plan, something shocking happened. We found out they were paying unnecessary taxes every single year, that their income plan was fragile. And if the market dropped at the wrong time, their retirement could be permanently damaged, not because they did anything wrong, but because they did not actually have wealth management. They had investment management. And those two things are not the same. How are they different? Let me explain. Most people believe wealth management means someone manages your money, picks funds, rebalances accounts, tracks performance. That is what almost everyone gets. But true wealth management actually starts with a completely different question. Not how do we grow your money, but how do we protect your lifestyle for the rest of your life? That single shift changes everything. Because real wealth management is not just about beating the market, it is about building a system where every financial decision supports your retirement income, your tax situation, your legacy, and your peace of mind. And this matters even more once you retire. How come? Because when you are still working, mistakes can be fixed with time and income. But in retirement, mistakes can easily become permanent. And here is the biggest misconception. Most retirees think their biggest risk is the market. It is not. Your biggest risks are taxes, income timing, and sequence risk. Sequence risk is where you experience market losses early in retirement while taking income, and your withdrawals from your retirement accounts are locking in those market losses. Once that damage happens, it is very difficult to undo, which is why real wealth management is designed to eliminate that risk before it ever shows up. Let me break this down into simple parts for you. Step one, wealth management starts with income, not investments. Ask yourself this: how much income do you need every month to live the life you want? Most people do not have a clear answer to that question. They just hope their portfolio lasts. But hope is not a strategy. A real wealth management plan builds income streams that are designed to last for as long as you do. So no matter how long you live for, and no matter what happens with the economy, your lifestyle is protected. That income is stress tested, it is planned, it is intentional, and it is coordinated with taxes. Which brings us to step two. Taxes are one of the biggest hidden threats to your retirement. Most people only focus on what they earn, but we focus on what you keep. Why? Because two retirees can have the same income and live completely different lifestyles depending on how their money is taxed. Real wealth management looks at where every dollar comes from: taxable accounts, tax deferred accounts, or tax free strategies. And then we design a withdrawal order that minimizes the taxes you pay over your lifetime, not just what you pay in taxes this year, like a CPA does over your lifetime, which results in much higher tax savings. This is exactly what we help our clients do at Bunza Wealth Management. And if you want to see how this works, there's a free video linked below that walks you through this strategy in detail. Now, here's the third part to wealth management, which most people miss: risk management. You see, most portfolios are built for accumulation, not distribution. In plain English, that means they are built to grow, not to pay you. That creates a problem when the market becomes volatile and you are pulling income. Real wealth management uses different buckets of money for different jobs. Some money is designed for growth, some money is designed for stability, some money is designed for income. Each dollar has its role. And then when the market drops, you do not panic like most other people, because your income is not dependent on selling assets at the wrong time. This is how wealthy families think about money. And it is how we think about our clients, which brings me to the fourth piece: coordination. This is where most advisors fail. Your investments, your taxes, your estate plan, your insurance, your income strategy, they all interact with each other. Yet most people have separate professionals who never talk. That is not wealth management. That is fragmentation. And it can lead to many financial mistakes and missed opportunities. True wealth management coordinates everything under one clear strategy, one plan, one direction. So when something changes, and it always does, the entire plan adjusts together. That is how we work with clients at Bunza Wealth Management. We take our clients on for life, we put your interests ahead of ours, and we measure success not by market performance, but by whether you sleep well at night knowing your plan works. If you are watching this and thinking, I wonder if my current plan is missing something, you are not alone. Most people do not discover these gaps until it is too late. That is why we offer a simple next step. There is a short video linked below that explains how we help retirees with $250,000 or more to create a reliable, coordinated wealth management plan. And if it makes sense for you after that, you can also schedule a conversation to see if we are a fit. Thanks for watching today, and I'll see you in the next video.